So we're continuing to talk about year-end planning, and this concept is tax loss selling and tax gain harvesting. Most people out there know what tax loss selling is, but what we want to do is purposely sell a share that's at a loss so that we can offset gains that you might have on other investments throughout the year. The other thing is that by creating a loss, you can actually carry back 3 years that loss and offset other gains from the past, and you can carry that loss forward indefinitely. Tax gain harvesting is essentially the exact opposite. But what you're doing is you're actually selling stocks that are at a gain, and you might want to ask, why would you want to create income? And there's two main reasons for this. First of all, you have losses that you want to offset those gains with and put yourself in a tax neutral situation. You may also be in a low income year this year. So maybe you were off because a family member was ill or you took a trip and you essentially don't have income, so you create a gain in order to pay tax. Another reason though is that you might want to increase the cost base of the shares. So if you've bought some share in a bank, say, and you've held it for 20 years and retirement's coming up and you know that you need to sell some of those shares, that value's appreciated a lot and you're gonna have a lot of gain down the road, it may be beneficial for you to actually sell the shares now at a gain in order to increase your cost base. And you want to do that in years where you might have low income because it makes you in a tax neutral situation and you may pay less tax in the future. The other big thing to note is the buying and selling of shares and the timing. So if you have sold a share at a loss and you want to buy it back because you actually wanted to own the share and you feel like it is going to appreciate in value, you have to wait 31 days before buying back that same share. Otherwise, it's considered a superficial loss. The other thing to note is that you can't sell the share in your account and then buy back in your spouse's account or in a TFSA account, for example, because you still control that share and it's still considered a superficial loss. So you'd have to still wait the 31 days before buying back that share in order to own it again. So it's important to do a review of your income tax from previous years to see if you have losses and gains. Review your investment accounts for the current year, obviously before the end of this calendar year, to see if that you want to sell any investments that you own for a loss or for a gain. What's the deadline? So we all think the deadline's December 31st. But it's not, because it takes 3 days to settle any trade that you would make. Plus there's 2 stat holidays in there. So the actual deadline in order to sell a share and have it settled by December 31st would be December 24th. You do not want this settling January 1st, so make sure you're not late if you are trying to lock in a gain or loss.